Schroeder. I'm the co-founder of Next Billion Ventures and a senior advisor and network partner for Village Global. It is a real pleasure to be with you. There are few more supportive than I of Ali, Pack Launch, and the collective efforts and achievements of all of you. There's really nothing quite like what you've done in rising markets anyways, and I think your impact is global. Now, we've obviously come through a sober period from the blow-off of the recent go-go days, and the pendulum swings can be vexing at best, but I just want to remind you, having been through two other periods of blow-off, that it is exactly at times like this that the best companies are built. They're based on first principles now, and they're building for the ages, not just at the behest of what VCs may want us to do for the next round. The unleashing of talent anywhere, because talent is everywhere, the increasing near universal access to tech, and the unprecedented capabilities and adoption of AI means we are writing very new rules, many without precedent. I can't think of anyone more interesting for us to explore our times with than the remarkable Anna Khan. You know her extraordinary background and her performance. Please do post questions in the chat, and I'll try to integrate them as we talk and at the end, but let's get right to it now. And so, Anna, how wonderful to be with you.
Thank you. I'm so excited to be here. And it seems like a lot of people have joined, 82.
Yeah, it's great.
I'm very excited.
And more, we'll see it in video notwithstanding. Anna, if you don't mind, I'd love to start a little bit with you personally, because people should understand the human being you are and some of the influences that have sort of shaped the way you invest. And I love a couple of quotes that I discovered about you. And one of them is you wrote, "I grew up in a house with 20 other people in Lahore." And I'm wondering if you could talk a little bit about that and how it's instructed you as an investor and some strengths it may give you that are unique from that experience.
Of course, yeah. So if a lot of Pakistanis are on the Zoom, they'll know that in our culture, living close to and living amongst extended family is pretty normal. But the way a lot of my friends did it is, maybe their aunts lived 3 houses down, or their grandparents lived, 10 minutes away. But I literally lived under the same roof with 20 other people. And it was, my 3 other uncles, and each of them had 3 kids. And then my grandma was sort of the head of the household. And I think when I was younger, I didn't know that not everyone lived like this. So to me, it was very natural. It was literally my life. But now reflecting back as an adult, I think it's made me much more sort of open to very different personalities, different people, different needs, sort of different kind of outcomes of career. And then, I hate to take everything personal and look at it from a venture lens, but if you do, I work with and deal with so many different types of entrepreneurs, and that doesn't make one entrepreneur better or worse than the other. And just to be in a house that was sort of that full of love, but that everyone was so different, I think that really led to me being, just more of a flexible person and enjoying variability. I think that that's probably the biggest takeaway. And then I think, one thing that is so special about growing up in a place like Pakistan, which has its pros and cons compared to America, but I think one thing that Pakistanis and also Asian cultures do very well is that you grow up really amongst a village. And I mean that both literally and metaphorically, but it's not just your independent unit. Everyone is working on the same team. And so to me, like, of course, I had my immediate family and my parents and my siblings, but I had my cousin and we grew up like siblings. And I had my aunts. And if my mom was away, like, I would go to my aunt or my grandmother who helped raise us in so many ways. And I think sometimes that that sense of community and village is a little bit of lacking in American culture. And sometimes people get that from their startup community, but it is something that I think we should be very proud of and protect in Pakistani culture, because it made a very big impact on me.
This sense of community, this sense of collectiveness is very powerful. And you have a global lens and not just America and Pakistan overall. You said software can and should be a great equalizer. Has it been, do you think? And if it hasn't, where are we and how do you think about that? True?
Yeah. I like that question of yours because I think that, just the things that motivate me, I don't think I would have been drawn to venture capital if it didn't have that ability to create change or propensity for change. Actually, when I came to the US for college, tech and finance was not part of the plan. Like I wanted to be a lawyer or I wanted to be in politics because I wanted to be part of something that I thought made a day-to-day impact. And once I got into politics or studied politics, I was like, whoa, everyone is sort of an armchair politician here. We're just talking. We're not doing. No one's doing anything. And in fact, the people that try to do something, they're just kind of so much red tape and so much bureaucracy. And so it was almost like this hot to the touch, like, whoa, I can't spend my life doing this because there are no doers here. And that's what actually, that reaction is what actually got me into entrepreneurship. And entrepreneurs break a lot of things too, but they try and they do. And there's less talking and more doing. And that's what very much appealed to me. And then specifically with software, even more than, I didn't know that I was going to be mostly a software investor when I first started. I was 22 when I first started in venture capital. And the firm that I was at was equally strong in consumer and equally strong in software. And so as a young person that, had not used a Zendesk or a Workday or a Salesforce, my interaction to tech was really consumer tech. But it was mired in sort of those same issues. I was like, oh, this video is cool. And like, I'm having fun talking to my friends on chat, but like, is this really changing business outcomes, changing people's lives? And that's what I saw in software. And I think that the equalizer part, the reason I focus on it today is I think that's where we have a real greenfield is when I look at the white collar workforce, the products can get better, but there are great products there. If you have a budget, you kind of know what to buy if you want to recruit people, pay people, manage your customers, pay your invoices. But if you are a blue collar worker, you don't have an email address, you don't sit behind a desk like you and I are right now, and you're mostly on the move, actually, American innovation has not caught up to you and is not building for you. The best it's done is a smartphone, right? Yeah. And so to me, I think, your question also was like, do you see it's an equalizer? And actually, will that help you make money? And so my answer is yes, it should be an equalizer. And that's kind of my life's work. And two, I actually think because other people are not investing in there and because it hasn't reached the second, third, fourth generation of software life cycles, which white collar software has, I actually think it's an amazing place to find TAM and to make money.
I mean, it's so interesting. Obviously, in a way, China has been exhibit A of this, right? I mean, they dug deep. Companies, we would have said Alibaba, game over. And then all of a sudden, Pinduoduo does God's work in third and fourth markets by the very idea of the extension of it. Do you find, I mean, this is a thing I think a lot of entrepreneurs don't fully appreciate about great venture investors, which is you have a constituency and your constituency is your LPs. Do you find that your LPs understand not only what you've said from a kind of a overall impact version of it, but the idea that this is actually an unleashing of a new generation and a new extensive customer base that you can actually do something really, really powerful for their interests as well?
Yeah, and a lot of people actually don't realize that LPs come in a lot of forms. So there is, the typical fund of funds. They're much more financially oriented, but we also work with hospital systems, endowments, kind of large nonprofits. And for them actually having, yes, of course, a bottom line, that's number 1, 2, and 3, we have to make them money, but also to say that the software company that made us money also helped, millions of workers that didn't have access to software is a massive added benefit and is something that LPs 100% care about. And in terms of sort of understanding where we invest and liking it, yeah, those are absolutely the questions that they ask us, which is, what is a unique thesis you are going after, and why are you specifically going to have a competitive advantage to win that? So they ask those questions, and then it's like, what is your unique sourcing ability? Because they want to know, me compared to, the 10 other VCs on Sand Hill Road, have I uncovered something that they haven't yet? Because sometimes not just thesis, but time to get to that thesis is what creates the alpha. So the LPs are very, very much on board.
You've said often, in fact, that sourcing is the heart of venture investing, and putting it in a, you and I and other people on the phone, we're really in many respects in the talent business. I mean, the theses can be very valuable. Obviously, we think about TAM, we do due diligence, we go into data rooms and all of that. But at the end of the day, we're looking at that woman and we're saying, is she the one? Like, is she the one who will figure it out? Maybe plan A won't be right, but by plan B, she'll get it. And that's the thing. Can you talk a little bit about how you size up talent? How you not only source the deals, but once you find them, you say, this is one that's different. What is it that you're looking for that really jumps out at you in all the experience that you've had?
Yeah, I think, there's sort of two questions in there. The first one on the sourcing side, I talk about a lot because, there are a lot of people that go into venture, let's say laterally, that they're operators first, and then they move into investing, or they started their own companies. And so they move into investing a little bit later in their careers. Venture has basically been my main career and my life's work so far. And so what that means is I started way at the bottom, and that means truly in a cold calling sourcing function. And I've seen now as venture capital has evolved, as more young people are hired into venture. In 2011, 2012, there were very few. There were 2 firms that hired young people. And now, any size firm wants to hire young people to get, closer to tech and closer to, Gen Zs, but it really wasn't the case. And so now there's this trend of, sourcing is beneath us. Sending a cold email is beneath us. We are so senior that we want other people to do that for us. And I always like to emphasize, if you are the person writing that first cold email, picking up that phone, having that first call with the entrepreneur, beyond the fact that it takes up much more time than just signing the check and doing the deal, but it develops that bond with the entrepreneur that I think coming in just at the top doesn't. And some of my best days, I tell this to my team now, is when, most of my meetings get canceled and I have a free afternoon to just source, just like when I was 22, and just go down the rabbit hole of the internet and say what else is the new thing? And I think VCs should never forget that. That is truly, I think, how you find the next best thing before everybody else. That's the key to sourcing. Once someone is validated as an entrepreneur, then I'm a price taker.
Yeah.
I haven't found the aha moment or the truth about this entrepreneur or the diamond in the rough for my LPs before everybody else. And so that's why sourcing at the right time is very important. Now, in terms of sizing up entrepreneurs, I've really thought about this question a lot. Some people think, they have to have gone to a specific school and they need to have domain expertise in the thing that they're building. And all those things are clearly very important. There is a certain bar that I want my entrepreneurs to hit. But beyond that, I think the other thing people don't realize is you are in a long-term relationship with an entrepreneur after you invest. Gone are the days of, and we are not just growth stage investors. We do, we are sometimes the earliest institutional investor, which means that on average, a company is private for 6, 7, 8 years. And, in the venture business, you can't just take your money back, right? You're really stuck through the good times and the bad. And so to me, a lot of the ways I pick my entrepreneur, if those basics are met, are what was it like in the negotiation process? What was it like in the diligence process? I call that sort of the honeymoon period. Where did the entrepreneur get stuck? Was there a level of respect? Was there humility? And most importantly, was there transparency when I wasn't yet your board member and investor? I think where both sides have gone wrong in this rush to I need to win this competitive deal before this fund, I'm going to pay the highest price, term sheet in 24 hours, is that that level of respect and transparency doesn't get built. And then once you're on the board, the foundation is not there. And so I always tell you, if you ask any entrepreneur that I work with, I always say, I will think we have a great relationship if you will not call me when you beat your quarter, but you will call me first when something goes very wrong. Because if you beat your quarter, I can't do anything about it. I give you a gold star and a thumbs up. But if you don't, if something bad happens, then I, as your team member, now on your side, can actually be very helpful. And so now I look at, you know, kind of 15 years later in my career, now I look at things that are much more personal and human versus, you know, where did you go to school and what was your GPA?
We've already gotten a few questions about something that you said almost parenthetically, which is about kind of a longer term view. And I think, and you can blow this out at the premise level, but I think there is some veracity that the go-go period that we just went into, it was that honestly, our industry was pushing entrepreneurs to think astoundingly short term. I mean, it was a lot about month-to-month growth. It's a lot about GMV over business units. I mean, I really hold myself and others in our space somewhat accountable. And yet the incentives of VC is somewhat that, even in not go-go times. And yet, as you said parenthetically, you got to be thinking about building a company for the ages also. How, and we've got now 2 or 3 questions along the lines of this. How do you think about that balance between short term is important, and it's important operationally, it's important for trajectory, it's important for the next round, but at the same time, you know that this could be a haul for some of these companies, and you got to be there through thick and thin.
You know, I've thought a lot about kind of what happened in 2020 and 2021. I think it's easy to say, oh, it was the entrepreneur's fault or it was the VC's fault. I would say one systematic thing, if I reflect back, that really did change was there were capital providers that came into our ecosystem that just hadn't been there before. And a lot of it was the interest rate phenomenon.
And stock market.
Exactly. And I think that these capital providers, frankly, did not really understand the venture capital game. It was much more about, how do we win this deal? And does that mean we pay the highest price? And, you know, all software companies are like an index. They'll all move up and to the right. So let's invest in them. All of that has gone away. And so now that vacuum is left for the entrepreneurs and the traditional institutional VCs to sort of fill, like we had, you know, from the beginning, which has been, you know, it's been these 2 parties. And I think both those parties were also to blame. You know, if we didn't give these high-priced rounds, like entrepreneurs would have to take normal price rounds and have diligence periods and give investors board seats and all those sort of governance and control things that I think are very important. All that being said, you know, I don't want to sort of wallow in already what happened, is I think finally to entrepreneurs, it has clicked that we are back in this normal. And by the way, that's another thing I want to highlight. A lot of what's happening is normal VC. Things got so crazy in 2020, 2021 that people think we are in really bad times. But if you think, I'll give you one very tactical example. Everyone's like, oh yeah, like in the public markets, you know, the average public company is trading at, you know, 6 to 8 times revenue. You know, 10 years ago, that was a great average software company. You know, at least you weren't like a consumer company that was trading 1 or 1.5x or a retail company. Or things like, I'll give you another practical example, or things like a deal is being done and an investor asks, you know what, I want a board seat and I want about 22% of this company. Normal, very normal. But I think, and you know, it'll get better over time, but entrepreneurs are really accepting that. I think they're understanding, oh, me getting the best valuation against these 3 competitors is only fun until the TechCrunch announcement. And then the day after that, I have to build this company to grow into that valuation.
Yeah, you got to deliver.
Yeah, and I think that that's the part that I think is very good for our ecosystem. That, I mean, we had to change because the prices that a lot of funds were marking things up at, you weren't going to get liquidity on those because the public market has just changed. That's where we get liquidity. But there wasn't that acceptance with the entrepreneurs. And now I think, especially this year and late 2022, that acceptance has happened. And now we're sort of reverting to the norm, which I think is very, very good for us. And the last point I'd say is there was also this, and I'm sure there are a lot of entrepreneurs on the Zoom call. There was a lot of aversion to long diligence periods, right? It was this memory of, oh, in 2021, we sent, sometimes not even sent a P&L. We sent a P&L, we got a term sheet in 2 days. And why can't you do that? Like this diligence is taking too much time. It's taking me away from the business. And my response to that is like, the diligence is not only good for us because we know what we're getting into, but it's also really good for you. Get to know your investor that is going to sit on your board for 7 years, and there's almost nothing you can do to get them off, right? And so I think these longer diligence periods are very good for our ecosystem.
Do you reference check?
Yeah, go ahead.
Do you reference check?
Oh, yes. Like multiple reference checks, and actually not just the ones the entrepreneur gives me. I often like to talk to people in a back channel way, and I always tell the entrepreneur that I'm doing this. Yes, you have to, because your period with the entrepreneur, best case scenario, a lot of the deals I've done, I've known the entrepreneur for a long time, sometimes even a year, but you can't always do that. But your period is so limited compared to all the other iterations of that entrepreneur that I would love to know, bad and good. And sometimes, you shouldn't be afraid of a tough reference call. There are some that can break the situations, right? They're very bad red flags. But then there's some that are like, like I often ask, what is the best way this entrepreneur likes to be coached? Are they someone that likes to be checked on often? Are they someone that likes help on the product side versus the sales side? Sometimes it's even things that help us make sure we have a very good communication style with each other. So yes, to answer your question, I reference a lot.
Yeah, but just as a quick hack, do you have a favorite question that you like to ask that you find really is revealing?
Yeah, I say that, if this individual's, if I called you again in 2 years and this individual's company failed or something bad happened, what do you think would be the reason for that? And then like things come out, and one of the things when I was younger, question. I always had this list of questions, a lot that I had to cover in 30 minutes, sometimes 45 minutes. And actually my husband taught me this because, he makes fun of the fact that I'm so chatty. And he says, sometimes don't always rush to get to the next question. Sometimes you got to ask the question and just let the person talk. Because then even look at how you've asked me questions. You've asked me certain questions, but then I move on to other things, right? And so, especially in a reference, letting the person talk and give even more information than they want is also an amazing hack.
One of the greatest historians I admire writes on his pad before he interviews people, old school. He always writes SU, and SU stands for shut up.
Yeah.
Just let people go. And
yes.
I couldn't agree with you more on that stuff. We're going to come to AI in a minute, but I want a couple of others just about how you invest right now. And you touched on this a bit. I just want to pull for AI. Let's put AI as something that will think differently about the question I'm answering you. As we are right now, being through what you've been through, has the pendulum swung too far from the go-go days?
No, I think, just based on kind of what I said in the other question, I think we're now focused on really great metrics that go beyond growth. Things like efficiency, things like margin, things like if you're spending $3 to acquire a customer and you're making $1 back, that's not a business. That's a venture money funnel, and so I think, if you had asked me in Q1 of 23 or Q4 of 2022, when truly everyone was kind of sitting on their hands and waiting for the market to get better, I'd say, guys, we can continue to invest. The market it's not in free fall. I think people were a little bit very scared at that point, but I think now, I see we are 100% doing deals at CRV. We're very excited to do deals. I personally did a deal in the last month. And a lot of the venture community sort of is back on the horse. So I think it's swung in the right direction.
Any of the hot stuff, things like crypto and Web3, have you reassessed any of your thinking of that, or has it been consistent?
We were always a little bit measured when it came to Web3 and crypto. And so CRV, we didn't have to deal with a lot of those, like FTX has gone away, or, we didn't understand how these tokens would perform. We stayed away from a lot of that. I think, we obviously think there were interesting things that could happen for the enterprise, building on the blockchain, things like that, but we were not heavily saturated there. And so I think our thinking on Web3 and crypto really stayed pretty consistent.
Mark Andreessen famously said, there are no bad ideas, there's just bad timing. Is that right? Do you think at the end of the day that we will be having a different conversation about some of this stuff that didn't take off?
Personally, my experience on Web3 and crypto, and this is not an original thought. A lot of other VCs have said this who are sort of not on the crypto train. Since I'm a software investor, and I even talked about like the things I really care about is a real business use case. Like, how did you make this enterprise money? How did you solve a very real problem for them? Not a problem that you've made up in your head that you think you can solve, but like an actual problem. And I could never find that in crypto, other than the fact that we're like playing with fake money. And of course you can make money buying and selling tokens. But to me, it was like monopoly, like not real investing and not real kind of ROI or business use case. On the Web3 side, there was interesting stuff kind of on the gaming front and on the consumer front, but it's just not my area of expertise. So yes, I agree with you. There's certain things that are very particular about timing. That is the venture game, to like know when the timing is, know when to buy, know when to sell. But I think there are also certain ideas that truly like have very limited ROI, whatever the time is.
I mean, back to first principles, the idea, does this make somebody's life better, easier,
Yes.
faster, cheaper, more beautiful, more efficient than it was before, is a pretty good question needing of answering, at some point. And with that, because you also want to hear that from your entrepreneurs, as you think about direct to consumer investing, and as you think about even B2B, are there, in some respects, we're in the business of pulling on strings on a sweater. Like if the string holds, we move on. And if it starts to ravel, then we're going to start digging into these entrepreneurs. Is there sort of a uh-oh metric in direct consumer software right now, or a uh-oh metric in the B2B software, that the minute you're hearing something, you're going to start digging hard? Like this is a problem. It's a tell that you need to unpack it beyond the sort of obvious things that we all do. But is there any one in particular in each case that you really say, you got to have this one battened down or else?
Yeah, for me, it's NDR, net dollar retention, which both encapsulates churn, but also how much you can expand.
Take people by the hand a little bit more on that, if you could.
Yeah, of course. So churn means, and we look at it on a cohort basis, but churn basically means how many of your customers on a cohort basis decide to not use your product anymore and decide to not pay for it. In my business, I do a lot of paid customers. So it's less on the consumer side, which is just engagement, like they decide not to use your app anymore. But here you can very specifically tell, okay, they have not paid on the annual renewal cycle, they did not pay. That's one part of the equation. The other part of the NDR equation is expansion, which is, in very simple terms, company A paid you $100 in year one, a very good business. And you see this in some of the best performing public SaaS companies like a Snowflake. In year two, that customer comes back and says, not only have I grown as a company, but I like your product so much that I want to buy module 2 and module 3 and module 4. That's called expansion. You want to see that in a business as well. And the best companies, also, if you look at the public markets, are sort of anywhere between 120 and 140% NDR. That means even if you take into account churn, they are adding 40% more from their customers on an annual basis than what those same customers started with. And I think that's really powerful. Sometimes when expansion isn't there, sometimes when it's a young company, let's say they don't have a module 2 and they don't have a module 3, I always say, okay, let's continue to build for expansion, but we got to make sure that the bucket is not leaking. Because to me, if you acquire a customer and that customer then leaves in a year, you don't have a business, because you know, you don't have a business on an annual basis. And so I always say, like, no matter how fast you're growing, you know, some entrepreneurs come to me and they're like, yeah, you know, we'll fix the churn problem, but I'm growing 4x. I'm like, but actually you're not growing 4x because
Exactly.
you lost, you know, 40% of your customers in year one. You're going back and having to reacquire them. And so really you're growing much less than 4x. So that's always been kind of my North Star metric.
The we'll figure out later question, even in the go-go days, was always a tell for me. That was a string to pull on. And it's
Yes.
it's an utterly unacceptable answer now. Like, people
Yes.
want to hear at least that you're thinking about it or know what it is. I think overall, how has AI changed your life, if at all, and current, like right now, over the last year, GPT-3 a year ago, and now we're in 4 or 5 shortly. A lot of interesting things happened in Wally. You know, have you had the proverbial offsite where you guys went back and said, you know, we got to rethink a few things, or are you like, we'll kind of watch the way it goes? Your portfolio companies, has it revolutionized them? What's the state of play of AI, and particularly generative AI, with you right now?
Of course, we've had that offsite. I think if you are a great institutional firm, you have to talk about things that could be kind of massive waves and market opportunities. I think for me, and I've spent a lot of time thinking about this, I haven't gotten on the AI train, because to me the thing that massively changed in the last year, if you take aside sort of how well the Nvidia stock is doing and how much investment sort of the big boys have done, you know, Google, Amazon, and others, that's clearly there, and Microsoft, of course, and how quickly OpenAI is going. For everybody else, to me, the biggest change that happened is that we are finally accepting of AI. Like, I was a venture capitalist in 2014, 2015. I went back and like looked at all the news articles too. And we were talking about the same thing. It's like NLP is going to change the way businesses do work. Is this going to change all our jobs? Blah, blah, blah. A lot of the same verbiage. The only thing that changed is that, and this is a master class by OpenAI and Sam Altman, is that it was so accepting, and we accepted it with open arms because it came to the home through ChatGPT. And I think that the interface became so perfectly lowbrow that it wasn't intimidating anymore. And so
But that's
from the
important,
home,
isn't
then
it?
you said, oh, like, oh, AI, like, of course I want to incorporate it in my software. Like, yes, GPT-3, GPT-4 has been incredible, but like GPT-1 and 2 had been around for a very long time. And actually, if you talk to old school ML ops and ML developers, they've been incorporating things like TensorFlow and models on their data for a very long time. The problem was access to data, right? If you were a small startup, you wanted to build ML models for your customers and give them kind of smart insights back. The problem was that you just didn't have as much data as Google or Amazon. And I think that's the gap that, yes, ChatGPT and OpenAI are solving, is that you have access to their APIs, which have essentially, you know, indexed the internet to a certain extent, and that's helping them move faster. But I'll tell you the big difference that I'm seeing, because, you know, so many venture firms say, you know, this is our next cloud moment or our mobile moment. This is going to change things in the same way. I'm not seeing that yet, because I was investing when cloud was happening and mobile was happening. And actually, all the value was accreting to the startup. Cloud, if you remember, I mean, you probably remember this very viscerally, the big guys really couldn't access it, because for them, it was all about security and servers, and we have more capital. So actually, we don't need to use this AWS thing because we can pay for all these servers. And it was the young teams that were like, oh, wow, like we can store all this data and we don't have to pay millions of dollars. And so it unlocked so much for the young guys. In AI, same with mobile. You know, the big ad executives, and I was actually building mobile ad products at the time. The big ad executives would sort of laugh in your face and they'd be like, oh, you want me to put like 20% of my budget in mobile? Like, what are you talking about? Like, kids are playing this, mobile games. Like, why would I serve my ad there? I do billboards and I do TV. And in AI, I'm seeing the opposite. Like, yes, the startups have access to LLMs, which are a little bit cheaper, but actually you need a lot of money for, GPUs and to pay for NVIDIA. And so I actually see all the value accreting to the really big guys, the Amazon, the Google, the NVIDIA, the OpenAI. And I think the young people are getting distracted by all these LLMs, but it's not really helping them put more money in their pocket. It's a cool, fun, creative endeavor. That's my biggest problem with AI, but I still think we're sort of in the first inning. So
Yeah, so
we'll
let
learn
me ask you
more.
two questions, Anna, because I have to tell you, from literally from Jakarta to Sao Paulo, I've not seen an entrepreneur who's not using these tools in experimentation and often efficiency. So it could be email, it could be transitioning software language, it can be certain email and marketing campaigns and that kind of stuff. And so everyone is playing with it in a very interesting way. And in some respects, it feels to me a little bit like an efficiency tool now and an experimentation. But all these poobahs just came through Washington, where I'm based, and I was actually helping one of them with a couple of meetings and spoke to them. And they said two things parenthetically. And I wonder how this affects, not just think about it in the short term, but as you think as a venture investor over the next 2 to 3 years and plus. Hypothetical statements. It was not like the reason of what they were saying. So statement one was, often in technology, we see things exponential, and then at some point they kind of level off a little bit. And AI is the first thing I've ever seen in my life where I see no sign of leveling off, and I actually see the exponentialness increasing, the velocity increasing. And the second thing, parenthetically, was, I've got a pretty good handle on what I think ChatGPT 5 will look like. I have a decent, very good handle on what GP6 looks like. Honestly, I don't have a damn idea what 7's going to be. How, as an investor, do you marry healthy skepticism, which is true, this kind of balance that you have in the here and the now, the experimentation of it, with the possibility that you literally can wake up in a day and have to rethink things all over again? Is it just something that you just sort of stay close to and that's it? Or is there something else that you advise yourself and your entrepreneurs to be thinking about at this level of significance and potential?
I love that question. I think that, first I want to tell everyone on the call that Silicon Valley is hyped on AI. I am probably one of 5 skeptics. And so they're getting a very specific angle, but it's good to hear it out.
Yeah,
I think to answer your question, whatever I think about it, and I have my questions, you 100% have to stay on it. And so, I know all the, great things that could happen, but I'm keeping my sort of healthy skepticism in-house as well. How do I stay on top of it? Just very basically, understand what's happening. We have amazing people on our team at CRV that know AI even more on a technical level than I do. And so they're literally reading the best papers that are coming out from researchers and sharing that with the rest of the partnership. And I think if you are a firm that doesn't have a grasp on what's happening, whether you think it's going to lead to multi-billion-dollar outcomes or not, you still have to have a grasp. That's one. The second is I try to spend a lot of time not with entrepreneurs that started using ChatGPT post-hype. I like to spend a lot of time with entrepreneurs, and I have some actually in my portfolio, that were AI researchers and developers prior to 2022. And they tell me, they're like, yes, things have technologically changed in a very real way, but I'm still not seeing the ROI that, let's say, a cloud or a mobile revolution showed me in the first 2 years. And so jury is out there, but I cannot contest that we have made a very, very powerful technological leap. But yeah, to answer your question directly, I 100% have to keep up to date with everything that's happening, whether I'm skeptic about it or not. And then the second is I spend a lot of time with people, and I do that actually in a lot of other industries too, but that were pre-hype. So have more of that healthy skepticism as well.
Well, I think among the takeaways, and so yet one more thing I admire about you and that the audience should understand, is skepticism is important in the VC's job. Our job is to be more on the skeptical side at the same time and not necessarily lead the witness, but see what she says and
Yes.
so on. Now, we have gotten a bunch of questions about Pakistan, as you can imagine. So I'd love to, if I could, with our time left, really kind of turn to that. And maybe I can frame a bunch of questions as follows. I mean, entrepreneurs, great entrepreneurs, wherever they are in the world, you and I as investors in any place of the world, we think a lot about the micro. In a lot of respects, we can't fix the macro. So we have to look at the entrepreneur, the problem they're trying to solve, the TAM there, possible expansion opportunities from whatever macro may come. But of course, in rising markets, and certainly Pakistan in the last year, the macro, it's very hard to disaggregate the macro from the micro. So let me just start by asking, how do you think about that? How do you think about the macro and the micro, and how does it instruct you on how you're assessing Pakistan now as an investment opportunity? Would you bring CRV, a Pakistan entrepreneur, and in Pakistan, focus for the time being in Pakistan? Give us a bit of a walk on this. It'd be very interesting.
Sorry, I got a national alert on my phone.
Yeah, everyone's getting it. It's a send for everybody.
Oh, it is. Yeah. Okay. That was very, very loud.
Hence.
Apologies.
No, I just got it now.
Look, I think you are right in that we have to exist in whatever macro environments we're in. I mean, look at I started investing in the US in 2011. A lot has changed. We've had different presidents, we've had different economic policy. There have been wars that have started, outside of the US. But I think people are much more sensitive to macro environments in emerging markets because they can impact investment, regulation, currency devaluation much more, and you see much more spikes than you do in emerged or developed economies. So I would say people are much more hyper aware and sensitive to macro conditions in emerging markets, whether that's fair or unfair, or at one point in time before any of us were alive, America was an emerging market too. Now it isn't. And so that's, I think, why people have so many questions of like, oh, well, who's the president and what's the policy and like, how's the currency doing? And what about the security side? And, is the politics stable? Because it truly can affect outcomes in a very direct and real way. And you see that now actually in places like China, which, if you were going to take the opposite end of what I'm saying, like that happened in a very developed economy as well. But that's sort of what the belief is. And if I'm very honest, I think the macro environment has been extremely challenging for Pakistan. And there are things that we have to fix at home that, and we're all working hard to do that I think will make investors feel much more comfortable about investing in the economy. That's one. I think two, and this happens both in developed and emerging markets, is when you are a nuanced, and actually this happened with a lot of female entrepreneurs and female CEOs, which I have a lot of thoughts about in the US, but when you are a nascent economy or something net new is happening. So in America, it was female CEOs, all right, let's take that example. In Pakistan, it was fast growing tech startups. The first 5 are going to be evaluated like 10x more than everyone else. And so it's like role models. They need to hit it out of the park. And I always say, like, Elizabeth Holmes and Theranos, that did a lot of damage for a lot of female CEOs who even were if they were building in consumer, if they were building in software. In the same way, there were certain things that happened on the startup side, money mismanagement, lack of efficiency, not thinking about profitability, that I think spooked a lot of investors out of Pakistan. That's even going away. And that's just an unfortunate reality. Is if we had 2 amazing wins, I actually positively believe that some investors would have stuck in Pakistan despite kind of the challenging macro environment.
Let me hold you on this just for a minute, if you don't mind, because I think it's incredibly powerful. So I want to get you to double click it. I just came back from Australia. And interestingly, some of the top investors there were telling me a bunch of people showed up in the go-go days. And the minute the going got tough, they disappeared, literally disappeared overnight. Do you think in some respects, one, that this is a phenomenon of people that just aren't being long-term focused, generally speaking, or do you think that there's an inherent specific thing about Pakistan situation? And secondly, and this was interesting to me also, he felt in a way that people clearing out was one of the greatest opportunities to the Australia ecosystem because the local ecosystem rose like in a whole new way, like they're doubling down now. How do you think? I mean, is the complexities of the macro Pakistan such that this is just really a macro wait and see period, or do you see that some of this pullout could actually be something that'd be advantageous to entrepreneurs over time, or how you think about things at CRV?
I think that we still, even if we pretend 2020 and 2022 didn't happen in Pakistan, we still had a challenging time attracting external capital in the country. I mean, even my last firm that I was at, Bessemer, CRV doesn't have an India office, but we had an entire India practice for several decades. India is right next to Pakistan. We never had a Pakistan practice. And so even if we take the go-go days aside, there were things that investors believed, was not the right infrastructure to deploy capital in Pakistan. Now, your second question, which is it allowing the ecosystem to rise, our local ecosystem? Yes. But where I think it's more challenging is our local ecosystem invested on the backs of international international investors. And so it was more validity of, oh, this XYZ investor is doing it, so we're going to participate. And now that the investors have gone, it's slowed down a little bit in Pakistan. I'd say that a lot of people that can invest, have the money to invest, have stable businesses in Pakistan. I think it would be very powerful for the ecosystem if they maintained sort of their volume of deployment, because I think that venture capital, again, if you have a diversified portfolio, I mean, otherwise it's a very risky asset, but if you have a diversified portfolio, you have bonds and other sorts of fixed income, or you have a big industry, then investing part of your capital in venture capital and other forms of alternative assets is actually very strong for the economy. But, again, most people forget this in the US, like part of the reason why tech blew up in a good way and venture capital blew up is on the backs of defense spend in the US. Most people don't know that. Actually, in my backyard, which is Stanford area, Silicon Valley, same happened on the Boston side. I believe it was called Route 128, where, on the healthcare side, a lot of that was government involvement. And our government to date has fallen short of that. And so even the local investments that were made on the backs of some of these international investors, to give kudos to a lot of the local players in Pakistan, it was business families that said, actually, we're going to take some of our capital and start deploying it to entrepreneurs. And I think, unfortunately, right now, our government is going through a lot of changes that it will come back to those business families. And so my recommendation would be, hey, if your businesses are stable and you can take out 3%, 5%, 7% to invest in local entrepreneurs, who I think are amazing, I think that would really, really benefit Pakistan's startup ecosystem.
In all your experience, and this is among the questions we got asked, how do you compare the entrepreneurs that you've seen in Pakistan and elsewhere? And then secondly, in the truism of the macro that you've just described so eloquently, what advice would you, there's some of these young people call me up and like, I'm going to start in Pakistan, but now I got to move to Saudi, or I got to figure, like everyone's trying to figure out how to take a great idea in the environment they're in. And I'm wondering, again, how you assess the talent compared to other places in the world you see. And secondly, when these women and men come to you and they want advice on what to do in this macro reality, what do you tell them?
I think Pakistani entrepreneurs are amazing. I think not only are they technically adept, which I've seen in a lot of other emerging markets, but I think they're uniquely creative. And I'm biased here, but we should listen to my bias.
I agree with you.
I am Pakistani, but they're creative in that I just think Pakistanis, whether that's part of our culture when it comes to music, art, design, love of food, And I think we're also this like very interesting amalgamation of a lot of different cultures, right? Like, and it's based on, we didn't do anything really to do that. It's kind of based on where our country is. There's some of that kind of Muslim Afghani culture. There's the Indian Punjabi culture. There's this like entrepreneurialism coming from, you know, some effects being close to China. We have a port city, all those kind of amazing things that I think make us not just technically adept, but very creative. And I think that's very special and very rare, because I think as an entrepreneur, you have to be extremely creative with it. How you get capital, how you get customers, etc. But I think that the way I think entrepreneurs can continue to survive in the Pakistani ecosystem is, you know, they always ask me, well, how do I get the American investor? I would say right now, it is difficult for an American entrepreneur to raise from an American investor that is focused on an economy that American investors understand very well. Pakistan is a little bit spooky to them. And so I wouldn't actually, for the next year, maybe 2 years, focus on getting an American investor. I would focus on getting a local venture investor, or even, frankly, a female, a family office. And if it's a female family office, that's even better, or female led. But a family office that can give you startup capital. And you can do a lot in Pakistan with limited capital, right? You don't need to raise $5, $6, $7 million seed rounds, and give them good ownership, you know, 15 to 20% of your business, and try to do something with that. There is pressure. I've heard a lot of entrepreneurs even say to me, like, actually, I think Pakistan is big enough. We have a, you know, a massive population. You know, why are investors forcing you to go to the Middle East? That's only to get international investors. But if you're going to stay local, I think you can stay very focused on kind of just the Pakistan economy. But I will say, you know, a lot of people also come to me, and this is my last point, on, you know, desk list is huge, and, you know, there's so many field sales workers, and, you know, why aren't people investing in the same way they are in sort of the blue collar workforce here in Pakistan? And I would say you have to understand the differences and the limitations. You know, here it's much more of an illiterate base, right? Like, yes, they're learning how to use a smartphone, but there's much more complexity in having them on board than there is in a place like the US. I would say second, which a lot of people sort of ignore, is it's still very much a cash-based economy.
Yeah.
Like that holds back a lot of software development or payments. And then last, this is a little bit of a contrarian point, I see a lot of software companies try to push payments hard. And actually, I say this to American entrepreneurs too, because there's so many great examples of vertical SaaS companies like Mindbody, Procore, Shopify that now say publicly more than 50% of our revenue is payments. What no one knows, you know, I knew all these companies when they were private. I knew they're entrepreneurs. These companies built massive software revenue and captured the customer that way before they turned on payments. And once you had a customer in the chokehold of your amazing software, it was obvious for them to turn on payments.
Yeah. Mercado
you
Libre,
can't start your company in year one, get 2 deals, and then say the rest of it is going to come from payments. It won't happen. Payments revenue is extremely hard. And so my other advice would be, hey, if you're going to base your entire projection on payments, revisit it in Pakistan, because it's challenging.
I couldn't agree. And I think it's actually true elsewhere. And I think to the AI question, if you have massive unique data sets, you're going to be able to do more and more things than you ever could before with that advantage at obviously almost zero CAC. So it's a very powerful statement for Pakistan, but for beyond. We're sadly just about out of time, but I got to hold you on one last one, because you have been so impactful, I think, in Pakistan, but also globally. And that's with women entrepreneurs. And I just wonder if you could just leave us with a thought on how are we doing, and what's coming next there.
Yeah, well, thank you for the kind words. I think there's, you know, if I had more hours in a day, I'm very, very passionate about helping female entrepreneurs. There's so much more I could do. I think that you know, if you ask me sort of what are the state of affairs for kind of female entrepreneurs, female VCs, you know, I started thinking about this when I got into venture capital, and it's been a long time. And I will say that, you know, I wish things had changed more than they have. It would be a lie to say they haven't changed at all. You know, you see a lot more female entrepreneurs, you see a lot more female VCs, but compared to what I think we can do as a gender, I think we still need people to give us more leeway and more rope. And as a takeaway, you know, the percentage still of venture capital that goes to female entrepreneurs is less than 3%. It was less than 3% when I first started thinking about it, right?
Yeah.
That's one. And then on the investment side, I think a lot more funds, and frankly, you know, LPs are helping with this, where they're saying, hey, your team has been 10 white guys for 20 years, and it's still 10 white guys. Like, you guys need to do something about it. There's more pressure being applied, but I think people are putting band-aids on that. And what I mean by that is bringing a lot more women to their partnerships, but then sometimes not making them partner, not letting them have check writing ability, not giving them enough carry. And I think behind the scenes, you have to share the wallet to give the women the actual power versus them just being in support roles, which, look, is better than 10 years ago, but it's still not how you create, I think, total kind of gender change. So I don't mean to be cynical, but I think there's a lot more we can do. And I think the only thing as women we can do better, which all of us can do this better, me included, is just help each other more. You know, I think I started this boot camp called Launch X with these amazing female entrepreneurs. And the only thing I tried to solve, you know, we didn't talk about marketing, we didn't talk about product development, we didn't talk about engineering. All we talked about is, what is the game of VC and how do you raise a great round? Like, what do the funds really care about beyond your product? And there is a lot beyond the product. And it's just this art of fundraising that, because there are so few women, we never shared with each other. And so my takeaway would just be, if you are a female VC, if you're a female entrepreneur, if you are an amazing female product leader, like, go and talk to other women and help them out. Like, even a 5-minute coffee chat, sometimes we don't even have time for that. A 1-paragraph email, a 1-line text can go a really long way, but we gotta help each other, because the men help each other a lot. And so we have to step up in the same way.
And I think men and women together can also do
Yes,
you know,
of course. Yes.
Look, the greatest gift a human being can give, Anna, is their time and insight. This has been an unbelievable hour. The backlog of questions that I could even get, I tried to incorporate much of them, but we didn't even scratch the surface because there's so much interest in what you have to say. And so on behalf of Pack Launch and this amazing audience, and myself, frankly, I can't thank you enough for this hour. It really has been sensational. I know people are going to want to try to reach out to you, so I don't know whether that's all right, and maybe LinkedIn or something else. Is there any way, if they do, that's helpful to you?
Yeah, LinkedIn would be great. My email is Anna@CRV. So LinkedIn message would be great.
This has been a very, very special hour and great to spend time
Thank you.
with
Great
Thank
questions.
you.
I really enjoyed it. And the hour went up so quickly. Thank you again. Take care,
Bye,
everybody.
everyone. And thanks to